The other thing that we got last week was the producer price index, which is the inflation metric as mentioned by the producers, by importers and the like, those that are making items and the wholesalers in our economy. It was a touch below where the December report came in, but it's much higher, both the December report and this report, about 50 bips, 0.5% or so than it was middle of last year. Which is just kind of showing just that steady drift upward that we've seen in inflation recently, as reflected in the kind of strong PCE number that we saw 2 weeks ago. So just kind of keep an eye on that. Non-core was at 0.5% month over month. The core came in a little bit lower. The biggest jumps were in professional and commercial equipment. In addition to that, we saw what was dragging the numbers down the most was on gasoline, actually, the cost of energy. So expect that to kind of reverse based on the conversation we just had in regards to global energy markets. But that's where that is. I would kind of put PPI as kind of the third most important of those inflation metrics as measured by the market. But again, it's just good to know, and it does sometimes front lead the consumer prices.
Right. Just a good indicator of who's eating, whether it's tariffs or just increases in energy prices.